What is the ultimate goal with our investments? It's financial independence, right? It used to be called financial freedom. Now it's financial independence. What is that? What does that mean? It's being able to live how we want off of our money, right? We may choose to work some, but we want to work when and how we want, if at all, and we want to be able to live how we want off of our money. That is living off of our investment. In this video, I'm going to talk about how to live off your investments and give you some strategies and insights that we've learned after implementing various strategies over the past 15 years while creating multiple income streams after we stumbled into early retirement in very late midlife. Hi, I'm Camille Gaines here and on my website, retirecertain.com. That's what I write about and I talk about, as well as my investing over the past 40 years or so. The very first step in living off your investments is to decide if you're going to make withdrawals to live off of your investments or if you're going to generate income to live off your investments. So much of wealth planning and getting what you want financially is simply deciding what you want and planning for it and moving in that direction over the years. As I mentioned, we've been creating these income streams and setting up living off of our investments for about 15 years, and it hasn't been without effort. So sort of the starting point is to say, do I want to follow the standard retirement plan of making withdrawals and living off of my money so that I sort of deplete it down over the years? Or do I want to keep that money intact and generate income from my investments, and I live off of the income that is generated from my investments? You may be unsure of how much your investment income is. Recently, I posted an article on my website at retirecertain.com about how to calculate your investment income. But basically, if very little has changed, you can just look at your previous year's brokerage statement or on your brokerage platform online and look and see how much money you made the year before in terms of income. And if things haven't changed a lot, you can use that for how much you're going to make off of your investments with regard to income. Now, this is not capital gains or increasing in value. This is income, and income comes from things like bond interest, which is very low to non-existent now, money market interest, which is also extremely low, and or stock dividends, which are not stellar, but some stocks are paying very decent dividends now. So that's the starting point, is deciding what you want to do. Some people aren't comfortable withdrawing their money. I've had other people ask me and comment on my YouTube channel and say, I didn't realize that withdrawing from retirement meant I was going to spend all my money. I thought I was going to live off the income. No, the standard retirement plan is based on retirement withdrawals, and 4% was kind of historically the rule of thumb for that. That's changed, it's been updated, but it's still around 3-4%, maybe 5%, depending on how much money you have and how optimistic or pessimistic investors are at the time that you're evaluating this or planning to live off of your money. But 4% is a good rule of thumb to use. Now, I'll talk more about how you can make that higher, but for now, let's just say kind of the standard plan is to withdraw that money 4% a year, adjust it for inflation, and spend that money down. And the whole goal is to not run out of money. You kind of got your fingers crossed, hoping it won't run out before you die. We didn't want to start withdrawing, and so we were too young for that, for one thing, when we wanted to start living off of our investments, but we also just didn't like the sound of it. We didn't like the plan. So we established income streams. Later on, then we'll be spending down and making withdrawals. But for now, that's not what we wanted to do. So it's about thinking what works for you, how it feels to you, what is your plan? Are you appalled at the idea of spending down, withdrawing and spending down your hard-earned savings to live? Would that just take all the fun out of doing anything? Or are you like, you know what? You can't take it with you. I don't have anybody I'll need to leave it to or help out, or I'm good with it. I want to spend it. All right. So a lot of that is just first deciding and planning on it. What are you comfortable with? What resonates with you? The next thing to do in living off of your investments is to decide if you have a choice in making withdrawals versus investment income. Circling back to what I said earlier about looking to see about what your investment income was last year, if it hasn't changed a lot, or you could even look at the previous quarter or two and multiply that times, if you use 1 quarter, times 4 to get an idea of about how much investment income you'll have, knowing that stock dividends usually pay once a quarter. So see if that's an option for you, and or take 4% and multiply your investment portfolio by 4%, and that's liquid investment portfolio. That would be your retirement account or just your investment savings if you're not focused on retirement accounts like 401ks or IRAs, and just 4%, and see how much money that is. When we convert things from percentages to dollars, and then we can go, that's not how much I'm spending every month. I'm spending more than that, or maybe less than that. Then we have a good foundation from which to work. We can go, I want to spend a little more, or I can spend less. And then we have a foundation, a really good foundation for being able to live off our investments while maintaining the standard of living that we want. Another option for many people is to simply combine retirement withdrawals or withdrawing from your investment accounts with creating income streams. Someone might, for example, create an income stream that requires no capital whatsoever, such as consulting income, or maybe a content-based website that they build themselves and write themselves. I've done that. It's very doable. I'm not a techie, but it took no capital and it generates some pretty decent income. Or consulting income, which takes no capital. Someone may want to combine that with something that's capital intensive, like dividend income, and or a 1% withdrawal from an account or a 2% withdrawal from an account. So there's no hard and set rule here. I like to say that it's just really all about what it is that you want and how you want to accomplish it and what you're going to do to achieve it. The next thing that we looked at was how we could increase our future retirement withdrawals from that 4% to maybe something a little higher, 5% to 6%. Now, again, I mentioned we're not taking retirement withdrawals now, but we want to be able to do that if we want to. So for us, this involved a strategy of improving our investment portfolio. I'm going to step you through what I did, and this is kind of where I nerd out. And so I got into the details here, and I looked at how we could improve our investment portfolio so that we could have a few things in place that would allow us to plan on a little bit higher retirement withdrawal. Just 1 or 2% can make a huge difference. So the first thing I did was to increase the return that we could get from our investment portfolio. Whether you call this your retirement portfolio, I call it investment portfolio because, well, that's what it is, right? So that's the first thing, as I looked at how can we improve that. Now, what I use for this is I like strategies that I can implement that have back testing data or actual data that go back 3 or 4 decades. So I can look and see what happened in the nasty decades like 2000 to 2010, or when we had interest rates that were crazily high like 20% interest rates in the early 1980s, or runaway inflation of 13%. So I like to look and see what's happened over the past few decades. And if I use this strategy going forward, I feel more confident that it will work, even if we're not in a strong bull market, or even if we're not in a bond bull market as we were from the early 1980s on several decades onward, right through certainly through the early 2020s. So that's the first thing I like to do, is look to see, can I improve the return that we're getting off of our investment portfolio? Not only the return, and that's based on several decade historical data, but the consistency of how our investment portfolio has returned. Because when your investment portfolio is up and down based on what's happening in the markets or other factors, it's harder to be able to make steady retirement withdrawals. A more level, less volatile portfolio will allow for it to be easier to make monthly retirement withdrawals. And then the third thing with our portfolio that I did in order to be able to predict and plan on for us, I'm just saying this works for us, a little bit higher retirement withdrawal when we're ready to do that, and that was to reduce the risk overall, because nobody wants to go through horrible bear markets or wild swings when you're having to, or when you are living off your investments by choice or out of necessity. And that was done by, again, looking at historical returns for several decades and seeing what the maximum drawdown periods were, and how long they lasted and how much they were. By drawdown, I mean from that top point where you're going, wow, this is really, really great. Our investment portfolio has increased all the way up here to that, period. We did this a couple times in the early 2000s, right? Where you go, oh, this is really a bummer. It really dropped, right? So that's the drawdown, is how much it went from that high point and how long was it until it got back up here. So those are the things I like to look at that help me to sleep well at night, but also to help me choose an investment portfolio that's got a good return within acceptable risk for us, for my husband and I, what works for us. Okay, so that was how I increased the probability and likelihood of our planned retirement withdrawals, and that was based on return and risk. There were two more things I did, and the second one that I want to mention is I reduced the fees that we pay for our investment portfolio. Now I manage a very low-cost ETF portfolio. There's no commissions on the ETFs as of now, and it costs very little to do this. I do pay for research, I pay for data, but it's still very low cost and it's minimal compared to what I would pay for wealth management services. And having said that, I'm not saying this is for everyone. Not everyone wants to manage their own portfolio. In the consulting, coaching, financial coaching work I do, I think it's important to figure out what you want, right? Because not everyone wants to do this. I'm not anti-financial advice. What works and what will allow you to reach your financial goals and be able to live how you want with the amount of money you want and live off of your investments. So I want to just make that point. But for me, I'm a nerd around this, right? I like investing my own portfolio. I like analyzing the data. I've been investing for 40 years, right? So I'm very comfortable with investing my own no-cost ETF portfolio, and I pay for the investment research myself. Occasionally I may pay for training, but overall, my costs are extremely low. And when you can lower your wealth management costs by 1% or 2%, well, there you go. You can just take that straight over to your retirement planning. So that was the second area that I really looked at to increase our planned retirement withdrawal, which will allow us and does allow us to live off of our investments. It's just right now we're not making those withdrawals. And then the third thing I did around the portfolio to increase the likelihood or the ability to withdraw more was to invest in a defensive portfolio, not one that was just about stocks and bonds, particularly since the very, very long bond bull market has neared an end or come to an end, and the stock market does go through periods of bear markets and bull markets. So I wanted a portfolio that was more tactical, that would invest in various types of assets based on what was happening at any given time in the economy and in the financial markets. Okay, so that's about how to increase your retirement withdrawals. First, we looked at figuring out, do you want to make retirement withdrawals, or do you want to live off investment income when you live off of your investments? Then we talked about, can you live off retirement income, or investment income, which may also be retirement income, but can you live off investment income, and or can you live off withdrawals, or do you need to combine the two, or do you need to do something a little more strategic and proactive that involves a little more effort? That's what we needed to do, and that's what we did. So here I am talking about it. And then the third thing we focused on was, okay, well, if we are going to make withdrawals and we do have this capital, how can we maximize our capital